everyone, welcome back. So we'll just go through very quickly because we are about 7 minutes away. We only got about 2 minutes to kind of set up everything and give you a little bit of a scenario of what's likely going to happen. So we are going to skip the theory again tonight, just like last month. But I do apologize, and on behalf of the team, we do apologize for the inconvenience. All right, my name is Vidya in general. Let's get started with a quick disclaimer. Any opinion discussed in this webinar or linked to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risks due to high volatility. Market reactions to news can be very swift and unpredictable, which leads to trading risks and delays in order execution. So be very attentive when determining the volume of your transactions and consider all possible risk factors. All right. Promo code if you want to use it, it's not from 2025. Don't worry about this. I'll show it again at the end of the session. But yeah, let's go straight into the numbers. And we're just talking about it on the chat there. But if we take a look at the previous number, it is at 2.7%. If we take a look at the forecast and the consensus, it kind of hovers a little bit at 2.8, 2.9%. Generally, it's still going to be below 3%. So is it going to be a problem? At this point in time, this is not going to stop the FOMC from cutting interest rates. I think there's a lot of pressure as it is, and the revision from the annual NFP last week, that was a huge miss. So we are kind of anticipating that cut to be fully priced in at this point in time. What if it overshoots about 3%? Then we're still going to get that cut. Probability probably goes down a little bit, but still above 90%. 25 basis points cut, and then we're probably going to get a hawkish note if it does overshoot about 3%. But if it comes in as per consensus, the market is probably going to do something crazy, and they're going to start pricing in for a 50 basis points cut next week, and more of a dovish tone coming up from the FOMC. Again, this is very different. We got political issues going on right now, so it will affect things differently. I'll explain that in a minute. But if we take a look at the core inflation number, it is currently projected at 3.1%. This is actually very important. If the core inflation drops below 3%, then we're going to get a guaranteed 50 basis points cut. Now, whether is it going to be important for the headline or the core, I think we're probably going to be looking at the core, because if you take a look at the headline, the core is already above 3%, so it's not a big deal. If the headline inflation or the year-on-year CPI goes up about 3% and the core CPI doesn't move, it stays at 3.1%, then it doesn't change the landscape that we have right now. Okay, so we're still going to be expecting that cut. We're not going to be expecting more of a hawkish tone, but that will all be on the 17th, where the FOMC might do a little bit of an adjustment in terms of how they're going to be making decisions going forward on that interest rate decisions. All right. Monthly change at this point in time, I don't think it matters. 0.2, 0.3. As long as we don't get 0.4, 0.5% on the monthly change, we should be okay. But anything that overshoots 3% on the headline CPI, overshoots 0.5% on the monthly change, and if the core inflation goes up to 3.2 or 3.3%, then we're likely going to be getting a little bit of a hawkish cut coming from the FOMC. So the reaction is not going to be next week. The reaction is going to be today. Whether or not the market is going to be aggressively pricing in that interest rate cut from the FOMC really depends on the numbers that we are going to be looking at in about 4 minutes' time. So, market starts expecting 50 cuts. Yeah, market is already pricing in for 50 basis points cuts. At this point in time, I think there's that move there for an additional 25 basis points cut. I think it is at about 30% of that probability as it is. All right, let's just jump in very quickly. In terms of the movement in the market, the Euro USD, if you take a look at the whipsaw just now, I think this is actually very helpful. This is from the interest rate decision from the ECB. No cuts, nothing new on the statement. We're waiting for that press conference to happen. But range-wise, if we take a look at it on a 15-minute time frame or even on the hourly time frame, this is actually very hard. We're not going to be looking at that accumulation phase. This is actually very risky to trade. Now, for the sterling, we will actually place a sell stop on the sterling. If we take a look at the positioning on the sell stop here, about 1.3495, just slightly below 1.35. And for the buy stop, you do want to have it a little bit higher. If we take a look at what that high is, it's going to be at 1.3525. So we'll leave it at 1.3530. So we got 1.3530 buy stop on the sterling and sell stop at 1.3495, about 35 pips of range. 15 minutes, dollar yen. We were looking at this a little bit earlier, but right now the positioning has changed. We are kind of out of the range as it is before the news even get released. The Aussie is an instant skip. New Zealand is definitely an instant skip unless you're trading a little bit more of a swing, but we'll take a look at that later on. Dollar Swiss, dollar Canadian. Dollar Swiss, we can do dollar Swiss. We do have a buy stop here above 80. All right, so above 80, you can place 80.10. I think it would be appropriate. For the sell stop here, we do want to have it below 79.80. So again, it is at about 30 pips of range there on the dollar Swiss. Dollar Canadian, I'll be skipping that one. Gold, we don't have that range. This one here is borderlining. It's actually very dangerous to try and place a buy stop on this one here. So I'll take a reading on gold after the release of the data that we have. All right, numbers should be coming out in about 50 seconds. So we'll see what the reaction is for the sterling. Hopefully this is enough as it is. Hopefully we don't get triggered before the numbers get released. All right. Looking like the sterling here in terms of the buy stop is likely going to be triggered, so we might actually be getting a little bit more of a potential risk asset run here. There was a question on Bitcoin, any correlations at this point in time? I don't think there's any correlation. If you do want to have a buy stop on this one here, you definitely want to have it above 114,800 for the buy stop, and for the sell stop, it's definitely going to be below 113,800. It is about it is about 400. Is it 400? It's about 113,800. It's about 1,000 in terms of the range that we have on Bitcoin. So yeah. All right. Number just got released. And I think we triggered sell on the sterling and buy on the dollar Swiss. We might get a little bit of a whipsaw here. Let me take a look at the reading that we have here. We'll lift the position here as it is because we just triggered a buy stop and a sell stop. We might actually have to cancel out soon. If we take a look at reading here, 3.1% core CPI as it is, 2.9% as it is as per expected. Everything is as per expected, but the monthly rate has gone up. It's now 0.4%. It overshoots the expected at 0.3%. Is it that bad? I don't think this is that bad. But generally, we do see a higher inflation in the market. But it should actually be a little bit more on the dovish side for the dollar. So I will actually need to see if this is actually going to pull back. But you know, if you don't have a stop loss on this one here, you definitely want to have a stop loss on this one. Any move above 117.15, I think that would actually be enough to cut it off. Or you know, if you want to go a little bit higher, 117.25, that would be the stop loss on the. Sorry, I'm looking at the wrong thing. All right, sterling. Yeah, we might actually have to trim this one here and probably flip, but we'll see. Just give me 1 second and let me check the range here. We are probably still okay for now. 1.1355. So I need to place a stop loss on this one here as it is right now. But yeah, as much as I don't like it, it is what it is. Dollar Swiss right now is being dragged down a little bit lower. We definitely need to go a little bit lower in terms of that stop loss. It is going to be about 45 pips off stop losses. So we'll see what happens. If it hits, it hits. If it doesn't, it's fine. But let's take a look at everything else here. But readings that we have, we are anticipating that more or less a cut, right? We're probably going to be getting a 25 basis points cut. But is it enough for a 50 basis points cut? I don't think it is actually going to be enough. All right, sterling is probably going to be hitting that stop loss very, very soon here. But it is what it is. We'll keep it there. It might swing back, so we'll hold on for a little bit. We'll see what the market reaction is. Please don't dear me, all right? Just that's one word I don't like, please. Okay, but yeah, I'll answer your question on that one there. 103% impact on NASDAQ and below 3%. Well, we already have 2.9%, so we're looking at NASDAQ here. I think we're definitely going to be looking at a little bit more of a push to the upside on the NASDAQ. But yeah, this is actually good for risk assets. We do see a higher inflation, but that higher inflation has already been priced in by the market. I think the decision that was thrown around the market was basically whether or not to consider that inflation number. But with that yearly NFP revision, just getting in 100, it is actually revised down 111,000. for the annual revision. I think that was the largest revision that the NFE has ever seen. So yeah, it should still point for more of an aggressive cuts by the FOMC at this point in time. But again, we're not looking at that significant snap off in the market here. I think market is looking at this and whether or not they can actually price in that 50 basis points. I think for now, why we didn't see a lot of spikes happening in the market, because that 25 basis points is pretty much a guaranteed cut at this point in time. It's going to be really hard for the FOMC not to cut by 25 basis points, considering the NFP, the annual NFP revision that was released last week. So the debate right now ongoing with the FOMC next week is that they're likely going to be discussing what the political pressure is on the FOMC at this point in time. So we'll see whether or not Trump is actually going to be getting what they want to, whether or not he's going to be getting that. Also, if you haven't been reading it, Cook's getting fired is actually not legal, so Trump don't actually have the power to do that. Obviously, he's always appealing, but until that happens, you know, Cook stays there as Fed members. Impact on gold. This one here, I think it actually should be positive for gold. If you take a look at the stochastics going on for gold here, this one here, you might actually be able to trade up if you want, as long as you stop loss. You know what? We are actually going to go long gold right now. I think this is really pushing to the upside, but the stop loss has to be clear. We definitely don't want to see gold dropping below 35.95. I think that would be the cutoff level for gold. In terms of how far it can go, I think it did spike up a little bit higher, 36.50, 36.75. That would be the limit so far, but wouldn't be too surprising if we're going to push to 3,700 for gold. Just to keep in mind, this one here is a little bit of a bit of a risk. We're talking about $55 on risk here, but yeah. It's not going to be an intraday position for gold, just to keep that in mind. All right, so this is gold. As it is, this is on the daily time frame. Currently getting resisted at R1, 3650, but we already surpassed 3600 with, you know, quite a huge confidence there. Sterling, it's likely going to push higher, so we are expecting that whipsaw that was taken. We're probably going to get stopped out on the sterling here. You know, if we take a look at the current positioning on sterling, I think there's a lot more room to go to the upside. Stochastics RSI still pointing to the upside. If you don't have a position yet on sterling, I would skip that. And if you're thinking euro, if you want to go on euro, just be mindful on the euro here, is that this is still technically below the Ichimoku cloud. We still have a little bit of a block building up at 1.1750. So yeah, that will be on the euro, and also the euro positioning here. If we take a look at it on the daily time frame, this is still kind of hovering. It's getting a little bit sticky here on that resistance trend line. Is it a clear break? I don't think that is actually a clear break, because the next day it kind of went down a little bit just below that resistance trend line. So we still need to keep this. We still need to respect this. Whether or not it's actually going to be broken really depends. At the very least, I need the LD to kind of move back up above the Ichimoku cloud, and also take out this high here, which is yesterday's high. That's going to position it pretty much. Resistance is going to come in at 1.1730, which is kind of the upper boundaries of that psychological price level. Yeah, inflation rate month on month has increased this point in time. Geopolitical still hot, very hot this point in time. You know, Israel's not backing down. I seriously don't have any ideas what they're thinking about. I think it's a huge risk they're taking, unless they have a specific secret weapon or anything like that to go against a lot of nations at this point in time. But yeah, I mean, Israel's attack on, you know, Doha, obviously it is a big deal. And then we got Russia bypassing Poland's airspace with the drones that was intercepted. You know, kind of breaks a lot of the stuff here. And then we got Trump, you know, trying to kind of lobby all the European nations to put tariffs on China and India for, you know, buying stuff from Russia. I think this is more on a sanction being done. So yeah, geopolitical tension is still hot. I think that's the reason why I say, you know, with gold, it's a completely different story. We're just not looking at this in terms of a rate cut at this point in time, in terms of that flight to safe haven. I think it's more of a geopolitical risk. It's getting really bad as it is. With the situation in Nepal, I think that's kind of isolated as it is. But yeah, if India tried to kind of intervene on that, then it will actually heat up a lot. Yeah, the whole world's in a mess. I'll just be honest with you. Ever since Trump stepped up, the whole world has just been in a mess. Okay, gonna try starting today for news trading for the first time. Easy trade after the news. Yeah, you don't actually have to trade during the news, and I actually do want to talk about the dollar Japanese yen. The positioning here, I think it's starting to come in, but let's take a little bit of a breakdown on the dollar Japanese yen here. Dollar yen, in terms of the daily, it's still not going to go anywhere, right? If we take a look at the whole thing on the dollar yen, it's still pretty much inside this box here. It's not really going to go anywhere. We're also inside the Ichimoku cloud. Now, unless we go above that Ichimoku cloud, which means we need to overcome 148.50, or we break that support trend line that we have here, for today, it would actually still be a close below 147. We can't really act on the dollar Japanese yen as it is, because it's just not going to go anywhere in terms of direction. It's just going to whipsaw back and forth. Definitely need to be looking at 147. But if we take a look at the order block that we have here, it is about 147, 146.91. So and 148.50 on the upside, we need to break above that level. The RSI is dipping really quickly here, and if it drops down, in the next 15 minutes or so, 20 minutes or so, it dips below 40, then we'll actually change the whole story on the dollar Japanese yen. We are actually going to be looking at a lot of dollar weakness here, and that would play in line with the market pricing in for that extra 25 basis points cut. So we'll see what happens here. But if we take a look at this, and I say, it doesn't it doesn't move above 3% on the headline inflation number, and the core CPI is unchanged, that would fall into the scenario where market is likely going to be pricing in for more rate cuts next week. And I think that's basically what's playing out in the market here. So, probably dollar Swiss positioning is not that hot as it is. But at the same time, looking at price levels, we're not really in that much of a jam, because it needs to drop down a lot more than what it's doing right now. So we're kind of stuck right now inside of the positions that we have here. We do see that whipsaws happening here, but not enough force to push sterling out. If you take a look at the sterling here, at least on the early time frame, if you notice what's going on here, there's actually a head and shoulder pattern here on the early time frame, obviously pending a neckline breakdown. But I think the shoulder itself, it's actually set at 1.3350 for the sterling. That's basically where our stop loss is going to be, because if that level is breached, then we just want to stay out. And for now, it's not breaching that level. So, I'm fine with the positions that we have here. Also for the dollar Swiss, as long as it doesn't break below 79.50, we have zero reasons to start cutting our positions, because if we take a look at dollar Swiss and the sterling there, we are basically getting the opposite. There's actually an inverse head and shoulder formation right now on the dollar Swiss on the early time frame. Basically what happens on the sterling as well. If we take a look at the Euro USD, you guys may be thinking, oh, why don't you call this a head and shoulder pattern? Because the shoulder is actually very off, right? It's off by about 30 degrees. I don't think that would be appropriate to have that and consider it as a potential head and shoulder pattern. All right. A bit confused since the information is positive for the dollar. Shouldn't the dollar yen be going upwards? Why is it going the other way? Can you clarify this? That's what I've been trying to clarify for the whole time. In terms of the data being released, doesn't mean that if inflation goes up, it's just positive for the dollar. You have to understand the context right now. You have to understand the story that's going on in the market, that next week a rate cut is going to happen, right? A 25 basis point cut is guaranteed. Now, what traders are going to be looking at is if the headline inflation doesn't overshoot 3%. This is something that we type in just now, way before data is released, and the first thing we talk about is that 3%. If it doesn't overcome 3%, market is going to look at that and say, yeah, it went up. It's predictable. It's okay. It only went up by 0.2%. It doesn't overshoot. It doesn't move above 3%. It's not really exceeding the core CPI at 3.1%. And as I said, if it doesn't come above 3% and the core CPI remains stable at 3.1%, market is likely going to be pricing in for a more aggressive interest rate cuts next week. They are likely going to start pricing in a 50 basis points cut. And that's the reason why the dollar is not gaining as it is. And if you take a look at the drop that we have, this is more on the dollar losing strength because the market right now is looking at this and say, all right, labor market is in a mess. There was a lot of misreporting from the BLS in terms of the NFP numbers. The unemployment rate, sure, it's stable. But if you take a look at the inflation, is inflation expected? Yes, right? Inflation is expected to go up. Now, inflation is expected to go up partly because of that tariff, but it doesn't overshoot the consensus. It comes in as per consensus. That's basically what the market has been pricing in. And again, the story is about 3% here. Now, with the inflation rate, as long as it's below 3%, what happens next week when that rate cut happens is that the FOMC can say, all right, you know what? Because we have a labor situation right now, it's not doing so great, we have to help out with cutting interest rates. Now, because as long as inflation doesn't overshoot 3%, we're going to start adjusting our inflation target from 2% to 3%, and everything is going to be okay, and that's justified, okay? So they need to make adjustments because right now the labor market is not doing well. And by the look of things, the FOMC is actually way behind the curve as it is. So this is the context of things. So you can't take this at face value and you say, oh, higher numbers, good for the US dollar. That's a completely wrong perspective on news trading. Now, again, Luna, I think this is the first time you're trading news. You're starting to get into news trading. So this is one thing you have to understand. You don't need to understand the fundamentals, but you need to understand the context of how to read these numbers. You can't just blindly say and look at the numbers, oh, it's up, so we should be a strong US dollar. And I think this is the fault that a lot of new traders has, or people that are not experienced with news trading has. They thought fundamentals are super simple, where if we have a higher number above the consensus or whatnot, then it just goes in one direction, but it's not. So that's the reason why we do this session. That's the reason why we always give you the context first in terms of what the market is anticipating, and then we guide you with the scenarios that we have. So we fall into that one of the scenarios here: 3.1% on the core CPI, unchanged, 2.9% as per consensus, didn't overshoot 3%. Market is trying to price in for a potential 50 basis points cut next week, okay? I still think we're going to get just 25, but the comments coming up from the FOMC is definitely not going to be hawkish. It might actually be dovish, right? So, but yeah, for a 50 basis points cut really depends on the argument that the FOMC is going to be having next week, whether they're severely behind the curve, and whose fault is it that they're behind the curve? Because the fault lies in the reporting that the BLS has published. A 911,000 revision on the annual numbers on the NFP, that is severe. That's nearly a million off in terms of their reporting. That's actually really bad. Yeah, as I said, we're looking at the context here. So context is very important. Somehow we got whip, opening buy and sell within range on sterling, sell on the bottom, buy on the top. Where should we cut it? We have to make a quick decision. And in all honesty, the most painless way is to just take the loss and then reassess the situation, because what you're trying to do here is you're taking off a hedge position. It's actually mentally harder to do than opening a new position, so just keep that in mind, okay? JC actually up to, going to be bad for JC is actually up to, what do you mean? Oh yeah, that makes a lot more sense. So basically interest rate cut will end up weakening the dollar, so investors are reacting early beforehand. That would be the way it goes, but it's not really the case. Reason being is, if we take a look at the rate cut happening here, is it going to weaken the US dollar? Yes, it will weaken the US dollar. But if we take a look at the weakness of the US dollar itself, we have to consider that with all the other central banks, for example, the euro is not cutting interest rate. They just announced it. I think they're undergoing the press conference as it is. Euro is keeping interest rates steady. There's no talk about any dovishness or anything like that from the statement that we have. So that would be a plus for the euro, right? And on the other hand, the dollar needs to start cutting in rates. Now the euro has been cutting, the ECB has been cutting in rates. The Bank of England has been cutting rates. Both the ECB and the Bank of England doesn't really want to cut more rates at this point in time. The dollar yen, if we take a look at the dollar yen, Bank of Japan needs to be hiking interest rates. I know there's political instabilities going on for the past year or so for Japan, but that would be the goal for Japan, right? So just looking at the positioning on the monetary decisions amongst all the central banks, the FOMC is likely in the path of easing, while all the other central banks right now is either on hold or likely to tighten the monetary policy. So, as I said, the Fed could actually be way behind the curve. But whose fault it is? That would be the question, right? Because I think we got all that misreporting on the NFP numbers. Yeah, we got jobless claims as well. Let me just take a look at the initial jobless claims. It's at 263,000. Again, that's higher than consensus. Previous week jobless claims was revised down from 237,000 to 236, and now it's overshooting at 263,000. Continuous jobless claims is actually a little bit lower. It's at 1939. I expected was to go up at 1950. Weekly average gone up, but again, if we take a look at this week's initial jobless claims, then yeah, it is actually a higher number, but I don't think it would actually matter at this point in time. I'll just be honest with you. All right. In terms of macroeconomic projections for the euro, this does play into it as well. If we take a look at the macros on inflation, I believe it's going to be 1.7% in 2026 and then 1.9% in 2027. It's all below the 2% target from the ECB. So ECB has this under control. So I doubt they'll need to start cutting interest rates, but there's a couple of things to consider as well. This is not going to be set in stone, okay? Political instability going on right now in France, that could have an impact. The Eurozone stance on whether or not to impose extra tariff on China and India just to put more pressure on sanctions to Russia, that could have a huge impact onto the euro as well. So we are not really in a good place as it is. All right, let's look at gold right now. I'm not too concerned on gold here. We're still way below, way outside of the range of where we need to be concerned for gold. This one is pulling back a little bit, but it's completely fine. As long as it doesn't break below 3,600, you should be looking at bounces off that 3,600. If you don't have a gold position, I wouldn't say that you need to be trading gold, right? But I think it was a little bit of a question in terms of gold positioning. But yeah, the current landscape and considering all the whole geopolitical concern, the whole world is in a mess. I think there's going to be a need for that safe haven assets. I think gold will still shine. And again, on the notion that Trump is interfering with what the FOMC is doing, sure, we got a little bit of a good news. That's a little bit of a block in terms of how Cook is going to get fired. But Trump is going to appeal, right? Is he going to get it done? No, he's not going to get Cook fired. He just doesn't have the grounds to do so. But he will start arguing that, I was right, Fed is wrong, you guys are behind the curve. You can't just look at the data, you got to have the feel of the market, blah, blah, blah. So this is still going to pressure the FOMC to be politically making that decision based on all these pressures that they have, okay? Now, if that happens, and if the FOMC bows down to what Trump wants, that would actually send gold really, really high, because we're looking at a government interfering with a central bank's policy making, which is not supposed to overlap. So that's the concern that we have, and this is the same ongoing story that we have talked about on the outlook as well since last week. What day next week are the rate cuts? It will be on the 17th. It will be on Wednesday in the US. If you live in Asia, I think it will be past midnight, in some parts of Asia. And also, if you're in Australia, it'll be early morning Australian, right? It'll be bordering Asian Open there. It'll be on the 17th of September, which is going to be on Wednesday. All right. So positions, I'll leave it as it is. I don't think there's actually a lot to trade. I'm not able to take on a new position on the Euro USD. If we take a look at the range and the whipsaws that this has created, we're not actually able to kind of position ourselves safely, at this point in time. And again, we don't have the trigger, because if I want to buy the euro, it will need to break 1.1730. If it doesn't break 1.1730, here lies the problem. The RSI could fail at 60 today. So the RSI is not indicating that the trend has shifted. What we're looking at is that we are looking at the pullback. Sure, the stochastics has also come off the oversold condition here. The RSI is now kind of still below 60. Until it surpasses 60, we're not going to be able to take a position on the euro to the upside. At the same time, I'm not able to short the euro, because if you take a look at the oscillators, none of them are indicating that there's enough strength in the market to push price down. Same thing with the sterling here. The RSI, sure, it's sharp to the upside, but it's not really exceeding 60. It's still lower than yesterday's high. And again, we're going to be looking at 1.3550 level. As long as this level is not breached, we're not able to take a position. We're also still below the Ishimoku cloud. So reading wise, in terms of price, this still leads to a potential for a stronger US dollar. It might kick that way in about 30 minutes time, but we'll see as it is, because when the equity market opens, then we'll see what the reaction is on the market there on Wall Street. Whether they're liking the higher inflation number, or there's going to be more argument for this. But what I'm thinking right now is, I think there's going to be a lot of traders, kind of potentially pricing in for a 50 basis points cut next week. Is it going to be higher than 50%? I don't think so. But, if we're talking about 30%, 40% being priced in until next week, that's significant, right? And I haven't seen Trump posted anything as of yet. There's just a lot going on right now. So I doubt he'll actually kind of meddle with the market. I think he has much bigger situation to deal with, especially with the assassination that happened yesterday as well. That would actually be a concern. And today's 9/11, so I think he's probably more busy, doing that 9/11 anniversary, which is 24 years today. So. ECB conference has already started 10 minutes ago. It's ongoing, but yeah, they're going to be doing their macroeconomic projections, and in terms of macroeconomic projections, I think we're looking at probably a lower growth and lower inflation. I think that's basically what it is, because if you take a look at the projections for a lower inflation in 2026. At 1.7%, and then 2027 at 1.9%, then yeah, the growth is likely going to be lowered to about 1.2% on the GDP growth. So we'll see what happens there. All right, last minute questions that you guys might have, but as it is, this is not a safe positioning to start opening a new positions. But if the wage growth likely to moderate further, yeah, I think Lagarde is probably not going to be that hopeful on the euro economy going forward. The world's not doing well, so just keep that in mind. I think it's just a mess as it is. I think there's a lot of confusion that goes on because of one guy. But yeah, Euro USD, it needs to clear 1.1730. Unless it clears that level, we're not going to be able to trade the euro. So we need to move higher than what we have here. We just bounces off support one on the daily, resistance one building up right now, 1.1725 to 1.1730. Definitely needs to clear off the Ishimoku cloud here. I'm not going to be looking at the pivots, I'll just be honest with you. But we need to clear off this high. If we are not able to clear off that high, we're not going to be able to push higher. So Euro USD right now kind of hinges on that, right? If it holds, then we're likely going to be kind of trading a little bit lower, but it's not going to be a significant push lower below 1.17. But we do have a convincing close above that 1.1730 level, then we're likely going to be tracking towards 1.18. It's definitely going to be breaking above that high there. But, you still have to look at this area here as a potential of resistance area on the euro. Okay. Sterling, I'll leave it as it is. It doesn't clear 1.3550, not changing the position that we have just now. That was triggered from the trade, so that's the reason why we just placed our stop loss there, because it was technically still within range right now. Not too concerned as long as it doesn't break that level. Now, 2 minutes to the hourly close here. Dow Yen again. We're not looking at that significant drop here. So the sell-off just now would be more of an adjustment, I would say. I think there's a lot more confusion in the market, and market trying to pick side on whether or not they should be pricing in that 50 basis points cut. So I'm not convinced the market is pricing in for that 50 basis points cut, above 50% probability. But we'll see. We'll see what happens here. Still a week to go, so things can change. But yeah, Dow Yen, again, as I said, on the daily outlook, it's just within that range there, and this is something that we can't touch. We need to break below 147, or we need to overcome 148.50 before we can actually place a trade on the Dow Yen. So it needs to do that. Your stop loss is going to be there. Your target is going to be there. If it does break 148.50, if it does break to the downside, then the other trade would actually be any break below 147. So we're going to be looking at about 146.75. Stop loss is going to be there, and in terms of target levels, we're probably going to be looking at that significant drop towards 144. Risk reward ratio, is it worth it? It's going to be about 1-to-1. We're risking about 2 yen to the downside for maybe 2.5 yen to the upside. To each our own, right? Do you want to touch this? I probably wouldn't be touching the Dow Yen because of that central bank dynamics that we have here. It is a little bit risky to trade yen crosses, and you have to factor in as well that there's political instability going on in Japan until they are able to convincingly nominate a replacement prime minister. I'm pro Koizumi at this point in time, but it'll be very different, right? Because everyone has a different stance in terms of whether or not the Bank of Japan should tighten monetary policy. But yeah, we'll see. How can I put cloud option in chart? I'm not sure what a cloud option is. But if you're talking about Ichimoku Cloud, then it's here. Where's Ichimoku? Ichimoku Kinko here should be on the trend. All you need to do is just drag it onto the chart and you're good to go. I'm actually losing the second window on the MT5 here. I don't know what's going on, but yeah, that would be how you do it. Just drop the Ichimoku there. All right. I think we're a little bit out of time on this one here. This is a code. It's on from 2025. We do apologize for the late start, but again, is it a tradable event today? Probably not. I think there's just a lot more focus on the 17th at this point in time. But do we have the whole picture right now? We do have a whole picture right now as it is. Inflation went up a little bit higher, but it doesn't overshoot. So that's fine. I think we're going to be looking at the FOMC making that concession. As long as the inflation doesn't overshoot about 3%, we can adjust our target band from 2% to 3%. We're just going to be relaxing our grip on the economy. That's basically what the FOMC is going to be saying. That means it will be a dovish cut. Now, the question right now is, are they going to be cutting 25, or market is going to start pricing in 50 basis points? If market is starting to price in 50 basis points, then you're going to see the equity market like the US 30 and NASDAQ going up really high. And just for reference sake, Oracle went up 36% yesterday, and it doesn't lift the mood in the market. If we take a look at the movement on the NASDAQ and the US 30, overall, I think we're still looking at a little bit of a drop in terms of what price was. Futures is already up, but yeah, the gain yesterday, we're just not looking at that significant of a move. on that Oracle gain. So we'll see. We'll see what happens here. I think S&P 500 was the biggest gain. As it is, it's pretty stable. So again, it depends on what the market is going to be pricing. If the market starts pricing for a 50 basis points cut, then this will all shoot up. Gold will also shoot up. The dollar is likely going to be pressured. The euro and the sterling, tough one, because it's still bound by a certain boundaries. But yeah, new candles starting soon. It's likely going to overcome 1.1730, but you need to have an hourly close above 1.1730 before making a decision, right? If it doesn't overcome the Ichimoku cloud, do not buy the euro. You're going to be putting yourself at a lot of risk. So really need to see another hourly close on this one here. So if you are thinking of trading today, I would suggest wait for the US market to open. The US market is going to be open in 25 minutes time. So wait until you open. Just wait about 5 to 10 minutes after the market is open, because you're going to be looking at a crazy price movement in about 25 minutes time when the US market kicks off. All right, guys. That's pretty much it for this month. So thanks for participating. I know there's a lot of questions that you guys asked. Are we going to be trading live on the 17th? Well, I'm not scheduled for that. I haven't been informed that we have a session on the 17th, so I would assume we don't have a new trading session on the 17th. But yeah, stop asking me. You should be asking Octa, not me. Okay. So yeah, again, we do apologize for that inconvenience earlier in the session. I think we had a similar issue last month as well during the inflation news session. But yeah, hopefully we'll get that fixed, and I'll see you guys next month. All right, in the month of October. Stay safe, trade safe, and don't forget, this is a very volatile situation in the market. The FOMC is making a huge move next week. There's a lot of political stuff going on. We also have geopolitical tensions pretty much flaring up everywhere in the world. We've got protests pretty much everywhere in the world as it is right now. As long as I'm concerned, a lot of stuff has been happening in the past 2 weeks in the world. All right, stay safe, talk to your trades, and I'll see you next month.